Good morning, everyone. This is Otsukimi. Who else would it be? This is Observations with Otsu. Got a lot to talk about today. In fact, so much so, I wrote so many notes. I'm actually going to make two videos. So this one is going to, so as you guys probably know, if you've watched some of my observations videos, you know I add a theme to it. And so I take about 5 to 10 minutes to talk about that theme. And then I add that theme and I integrate it into my analysis for Bitcoin and Ethereum and Solana, or whichever usually the third coin it rotates. It just depends on the nature. Lately, it has been Binance Chain, but I think last week I may have done Solana. So we'll cycle those out. However, my notes got really big. I was originally going to discuss like macro analysis and how I don't like it and how I think it is a distraction. And so if that's something that you don't like, you're probably not going to like that video. But it's nothing personal. I've done a lot of research on that, and I want to go into that very I do want to do it gracefully. I want to emphasize that that's not a video that's going to try to demoralize anybody. This is just me looking at it rationally, why it doesn't make sense. The more that you look at it, the macro only makes sense when you don't look at it that much. So I've decided that I had too much data, so I'm going to make that a separate video. And so that's going to be either later tonight or tomorrow. It just depends on the time. I'm a very busy guy this week. So, um, with that, I'm going to parse out some of the data that I have. And so observations today is going to be about the skill set, I guess, required that you would need to trade. So I'm going to cover basically like, is technical analysis easy? How should we approach this? Should we just blindly long? Should we, you know, I just made a tweet today about like a Breaking Bad gif about people mixing chemicals and equating that to people taking so precise measurements about candlesticks, or about, it could be macro, it could be wave theory, it could be order flow. You got all these things, and I know lots and lots of people in this space. I know hundreds of people in this space, and some of them are developers, some of them are traders, some of them are VCs. I know people all around the world. And as far as traders go, there's a big difference between a lot of people, but most people tend to gravitate towards the quote unquote higher IQ end. They gotta find something smart because they think smart TA equals good TA. And I want to focus on the fact that that's probably not true. And so we'll go into that. So that's kind of the theme for today. And so the title of this video is going to be called The Aptitude of Analysis. And I think I may have covered something similar to this before, but I think it's worth rehashing because we're in a really critical time right now. And I'll emphasize why. And because people more than ever are still focusing on, Fed rates or macro, or, they got these low targets of 14,000. I saw that the other day, which I believe is bogus, honestly. But we'll get into that. And so I want to save that for later, for my discussion after all my introduction stuff is finished, but before we get into the Bitcoin charts. So I hope you will enjoy this video, and we'll just kind of keep going with this. So some preliminaries, I've got quite a bit actually. So if you haven't joined Nowhere Discord, that is my Discord channel. It's called Nowhere HQ. It's where I put everything. I have a laundry list of things that I have added as well. And so I'm gonna get trying to get this out because I don't think I remember offhand. So I added I added a lot of channels, and these are active channels. These are not channels I just decided to add and try to brag about. I'm not bragging about this at all. I'm just saying, like, Nowhere Discord is a place that I have created, to have my followers communicate to me and things that we can discuss. And so there's a lot of gaps in the crypto world that need to be discussed, I think, more rationally. And so here's a few of them that I have added. So in the past week, I've added a mining channel because we've had a lot of people in there that are focused on mining. They want to talk about that. I also added one about NFTs, so we've got NFT discussion. We also have NFT artwork, so if you want to share your artwork or things like that, I'm starting up in as kind of a hobby. Um, some artwork. So I've actually been I was an artist in my teen years, graduating high school, going into college. So I kind of dropped that because it wasn't really valuable at the time. And so that's kind of like a hobby of mine. And a lot of people have said I've done well with that. So I'm just going to take a stab at that. But anybody can contribute to that. So if you have artwork or you want to talk NFTs, you can do that. I'm also going to do on-chain discussion, a lot of on-chain analysis, and I see a lot of people aren't really doing it very well. So I'm going to provide my own. I've got a lot of subscriptions to softwares, things like that. So I'm going to try to contribute that. We got Dune, we got Glassdoor, there's other things. So some of those are free, some of those are not. Um, so that's going to be where that lies. Another one's blockchain programming, and this is something that doesn't get discussed very often. And I'll be honest with you, that channel is more for me than it is for perhaps you, because I have started a program on the side. Like I said, I'm a very busy guy. I probably put 70 hours a week into crypto, so I'm starting a program where I'm learning smart contracts, things like that. So I'm going to share some of the things that I've learned and growing and how to read smart contracts. So if you want something more technical, you can look at this. So that and the on-chain discussion will go hand in hand. So that way maybe you can read into something. Maybe you don't even know how to read smart contracts. Maybe you don't know how to read, the ether transactions. So I'll kind of assist with that as we go. And then last but certainly not least is the friend tech analysis. So that's something that I've looked at over the weeks. Friend tech for me is still an experiment. I'm not guaranteeing anything good or bad. I just don't know. So I've decided to add an account for my business purposes in case other businesses want to try something like this. And so it's going well. And so what I am doing, I just released this today, is that I am doing technical analysis on keys. And so I'm calling it Key A instead of TA. And what I'm doing is I'm actually writing down the data and I'm adding my own A-run analysis to that. And so with that, I can have some sort of, not necessarily predictive models, but a way that we can look at that. I just released Haska's chart today. That's the first chart that I've done. And based off of his data, I think that he could double in his floor price in about 2 to 3 weeks. So we'll see if I'm right or wrong about that. And so I've added some other ones as well, but those are the main ones. I also added, oh, another big one is I actually added a small cap channel. So we're going to talk small caps as well. And so it's going to be pretty heavy. I just wrote something today about NFTs that I think is worth mentioning. So go ahead and check that out. And all this is free right now. Um, some of this stuff will be paid, but most of this is free. And so in addition to that, I'm also going to launch Nowhere Premium, and so that'll be a paid service where you get more dedicated communication to me. You get more videos. You get about one a day actually, and so that's going to be there as well. The second preliminary thing is actually my Apex bots. The Arun Pro bots are live, and I started with Apex, and I started just with Bitcoin, Ethereum, Solana, and XRP, just the four of them, and just on the mid time frames. But they are live. I have to tweak something right now because for some reason they're flowing into only one channel, and I want them to flow into multiple channels. But I'm gonna fix that later tonight, and then it'll be live. And so I'm looking at that as a way to expand everything. So as you can tell, my Nowhere group is or my Discord group is really big right now, and so that's the thing. That is a paid thing. I'm going to, if you joined Apex Academy last year, you get a free 2 months. And so I'll offer that again because Apex Academy is also coming up as well. And so if you enroll in Apex Academy, you get the Apex bots for free as part of that service. In addition to that, when I launch Apex, the actual bots, um, there will be an introductory price, or I'm gonna do like the first 2 weeks. There's gonna be a discounted price. That's it's never gonna be that low ever again. And I think I'm also offering monthly plans and yearly plans with that. So those are preliminaries. I got a lot to discuss. It's going to be a big week for me, and so those are the preliminaries. I don't think I have much else. The only other thing is friend tech. So if you aren't in friend tech, you can add me at Otsu Arun. That's my alt account, and so it's doing okay. Again, I'm not guaranteeing anything. I'm not even going to say it's the best thing or whatever. If you're there, you can go ahead and buy my key. Right now, it's like $40, I think. So I'm not. I'm pretty conservatively priced compared to a lot of others. Because like there's other people that I know that I'm probably on the same field with, and they're probably charging. They're probably hundreds of dollars. So anyway, that's that. And again, I want to emphasize I'm still new to FinTech. I'm not advertising it per se, but anyway, that's that. So I think that's pretty much it for everything. So we're just going to go ahead and get to the, the story portion of this, the theme, and then we'll just get into the charts. All right, so I want to introduce the theme, and this is the aptitude of analysis. And I want to talk about just the idea of trading in general. So this is kind of like a backseat discussion. If this doesn't interest you, you can always fast forward to the Bitcoin section. But I want to talk about how people trade and the analysis that it brings, because there's a lot of ways to do it, and quite honestly, there's a lot of money to be made doing it. And honestly, that is why people do it, because there is money to be made. Because I think if we're honest with ourselves, there's probably 100 different ways to analyze Bitcoin or any other asset, and some of those ways are really good, and some of those ways are really bad. And the only reason that any of them even stand up is because there is money to be made in something. So something has to have credibility. The trouble with this, however, is there's a few things. Trading in general is it's not created equal. There's layers and layers of types of ways to trade. There's different assets, there's different indicators that do different things and do those different things at different times. So you might have something very simple like an EMA or a moving average. You might have something a little more complex as RSI. I feel like RSI is kind of not as easy as people think it is. And you got something more complicated like Arun, but then you also have even something even crazier like order flow and Elliott waves and even moon phases. I would throw moon phases in there. Like I don't like to talk about moon phases. I think it is a bogus way to interpret analysis, but some people do use it, so I have to talk about it. Okay, I'm not an Elliott wave trader. I don't understand it. That's a foreign language to me. But some people claim to make money off of that. Okay. And so all of those are worth discussion. There are people that say that they've made a lot of money with order flow. I know people that make money off of order flow trading. I don't understand that, but we have to discuss it, right? And so there's certain interpretations there. Should you do a certain analysis over the other? And so it lends perspective to these things. What is worth doing? What is not worth doing? What should you try? Is it dynamic? Does it depend on the person? Does it depend on your in real life circumstance? Are you younger and single? Are you older and married? Or do you have not a lot of time on the charts? Do you have $100 or do you have a $1,000,000? All that depends. Okay, and so I think that is probably not the foundation that people want to talk about, but I think that's the foundation that we need to talk about because trading is dynamic and subjective. Indicators are subjective. People have different lives, okay? And I'm not saying people's lives are necessarily subjective, but people live very dynamic and different lives. My life is going to be vastly different to someone just starting off. Like I'm getting to the age now where I see a 19-year-old man walking down the street and I think that he is weird. Like I've become the older guy that I thought was weird when I was 19, okay? And so people would criticize me for what I did in my high school years, and now I got to be careful. I don't criticize, but I almost do, and so I got to be understandable with that. Okay, I'm not going to turn into an old boomer necessarily. So you got to kind of view that from a different lens, and I think trading is kind of the same way with that. And so I think that's the foundational perspective. It's not the one that I think everybody wants, and this ends up creating a complex array of issues because somebody will be trading off of wave theory, for example, and somebody else will be trading off of trends or let's just say moving averages, right? Just to keep it, you know, I feel like those are opposite ends of the spectrum. And so you're going to have one person say, you know, I have my moving averages, and this guy with this doing the Elliott wave, he doesn't need to do that. It doesn't make sense. It's pointless. He's just a LARP. Blah 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 blah. like almost to the point like to somebody that doesn't understand Elliott waves, and I don't know a lot myself, but to someone who doesn't understand Elliott waves, some people might think that that's fake, or some people might think that that's almost like magical if they appreciate that or if they want to appreciate that. And I bring up Elliott waves in general because a lot of people are very split on that. And I don't use them. I don't know enough to use them. I know just enough to know that I know people that are reputable and make money that do use them, but I don't know them enough to know if it's just the Elliott wave or if there's other things. And so that's the thing. We need to understand that no trading perspective is 100% accurate. Even if you found a perfect system, it's not going to be perfect 100% of the time. That doesn't make sense, and it's not supposed to. And so that's the idea. But there is a difference between saying that and saying, all right, I'm going to follow this, and if it's wrong, I'm just going to blame it on something else. It doesn't work like that. And so there's a certain type of aptitude that you need to have. You need to understand multiple layers of this. First of all, what type of analysis is right for you? I am under the impression that there are multiple ways to look at something from a different lens. Okay, and so for example, I'll take the New Testament for example in Scripture. So if you take the first four Gospels, most people know that the Gospels are the book of Matthew, Mark, Luke, and John. Okay, and so the analysis on that is that these Gospels, all four of those, were taken to the perspective that Matthew, Mark, Luke, and John were all with Christ while he was here on earth. But however, the books are very different from one another, and some of them are very almost verbatim exactly the same, and you're like, well, that would make sense because they spent time together. But other people will, for example, like Matthew will have a very different perspective than Luke. So what is that? Is how true is this? Is there subjectivity to this? What's going on? And the general consensus is that it's just a different perspective. So for example, Luke was a doctor. He was a physician, and so he was coming at things through a physician's lens. And if you notice, the book of Luke is going to have the healings of Christ much more in his gospel versus everybody else's, because that was important to him to look at. And so with trading, that's the same thing. I would analyze over and over again, what are you good at? What are you normally good at? And so for me, I discovered it was Aaron and trends. I don't need to complicate this. Aaron is a complicated system, and I don't really tell people to necessarily use it. If they want to learn the basics, that's what my Apex Academy is for. Um, and I do go into some advanced things with Aaron, but it gets lost on most people. However, I want you to kind of, your first step with this would be find what's good for you. Are you better at trends? Are you better at pure price action candlesticks? Are you better at macro? I think macro is bogus. I really do. And so, and it's not that I think it's bogus per se. I don't think the effort is worth the returns that you get out of it. A lot of people, and this is why I go into this video, and this is mainly going to be part of the second video I make, that people want to act smart. And so that's the danger. And so that's kind of the aptitude part of this, is people think they need to be super smart to trade. Okay, and I discussed this morning with my wife, that I think there is a certain point of time in your life where, and it could just be me, maybe it's somebody, I don't know, but there's a certain point where too much, like you can have too much intelligence. And I think that's lost on this current generation, that people think the higher your intelligence, the better off you will be. And I think it's quite the opposite. I think there's a certain point where you become too intelligent for your own good. You start to worry about things. Like a lot of high intelligent people that I know are very, very dissatisfied people, because they know too much in a sense, where people should be doing this instead of doing this, or they become too arrogant in their ways, and so it can become a vice. It can become to the point where it's diminishing their lifestyle. And so there's you can apply that to trading. I think there is a part where you can try to look at trading too intelligently, and that has been my observation really for the past year with this Jerome Powell FOMC thing. I think people people I know people now that will take their entire day out to watch these meetings for a 2 second clip of what the rates are going to be, and then everybody talks about it for the next hour, and then people forget about it for the next month. And so none of that is patternistic of a healthy way to trade. Okay, I have been vocal. I've been vocal since last September, so 12 months straight, and I've been very vocal about it since last November, so 10 months now, about how those meetings are not going to play out very well. As far as they're not going to have a big effect on the market, and they haven't. They haven't. Okay, we've been going up ever since, and so everybody goes into there and to say, well, what's Jerome Powell going to do? Um, so this is Bitcoin. Like, when I joined in 2017, the whole mantra was like, we don't care about what the government says about our money. We're going to do our money our way. And now, 5 years later, everybody's watching the government to tell us what to do with our decentralized money. Okay? And shame on us, honestly. Shame on us. Because this is where we got to the point where, I need to be careful because I'll get into a rant. And then this will be a 3 hour video. But we have gotten to the point where we need to listen to what the government says about the money that we've created, because the money that we created was supposed to be designed as a peerless. I've got nothing against the government, per se. I wish they would do some things better, of course, and I think we all do. But the thing is like this: the Bitcoin was created for this reason, and so ever since the pandemic that everybody got scared off their pants. And some of that's reasonable. I wasn't exactly, in the right time in a mental state at the time, so I get it. But at the same time, that does not excuse 3 years now of price action that we could have done things differently. So I don't know. There are suspicions of mine that I think that we are going to start following stocks closer, more and more, not less and less, and that's going to be a shame. That will be my fear is that will happen, and that will be the death of crypto. Um, and honestly, I see crypto dying already, and it's not just this isn't the bear market talking. I've been through this. This will be my third cycle now, and so I've seen some stuff. And I do remember people being bright about things. Of course, everybody's here for the money, so don't try to trick yourself with that. But people back then really just got together and developed just because. And I know some people that they had no skills, they had zero, but they had a heart to learn, and they had a desire to be here, and they learned. Okay, so you didn't even have to have much at the time. You didn't even have to have money at the time. You just needed to be there and show up and talk and network, and you could do really good. And you can build a lot of good things in 3 years, 3 to 5 years. So, but now it's like everybody's doing it for the money. It's like I worked with a project last week that they launched. They launched, or no, I worked a project last year. They launched last week, and I haven't been with them for over a year, but they fell flat on their face because they're too concerned about token price. They're too concerned about making sure people don't sell. Okay, you launched a token. People will sell. Like you gave them, like, this project airdropped tokens for months. And some people even had them for 6 months plus. And so, yeah, if I made a profit off of it, that makes sense. I'm not saying I would have sold per se. Maybe I would have, maybe I wouldn't have. But the point is, you can't expect people not to sell. Okay, and I've been in projects that have done that where I've been in other projects that have done that where they have the some of my previous real this was really early. This was like 2018, where I was getting paid in tokens instead of stable coins or USD for my client projects. And on my business side, I don't take tokens anymore. I take stable coins only, um, Tether or whatever. But you know, they would tell you, I mean, you would get paid. I mean, some of my clients would pay a lot. I mean, um, and I guess I shouldn't say how much, but they would tell you though, don't sell this. And I'm like, well, what's the point? What's the point of me having these tokens unless I can't transfer them into the asset that I need? At the time I didn't have a lot of money, so it's like it doesn't make sense. See what I'm saying? But that's the Aptitude part of it coming back, because some of these people are not smart enough either. So we'll get into that. I think there's a certain healthy thing. You've probably seen the graph where it's like sometimes the best trades are the high IQ trades or the low IQ. It's that mid IQ that's a problem. And so we'll get into that. I should probably digress and get into the charts. But the whole idea is, don't think that you need to be super, super smart to trade. Um, and I really do discourage you from spending hours upon hours a week looking at someone that acts smart about trading that may not be smart. People can fake things more than ever nowadays online, especially on X. I hate to say it. I like some of the changes that have been made to X, but it also does give us more leniency, or it gives us more self responsibility to interpret what we see as real and authentic or not. Because anybody can sound smart. Trust me. I'm trained. I was trained in college to try to act smart through words and language. That's all I did in school. Research, words, oratory, things like that. So I can sound really smart sometimes if I want to, and I can do that in a bad way too, because I can really insult some people too in a bad way, and that's not good. But the thing is, I know the tricks. I know that people can dazzle you with bullcrap because they want to sound smart with their acronyms or their words or their 2-year treasury charts or whatever it is. Okay, and the most toxic thing that you can do is actually have a low IQ, but use high IQ as a means to hide that. And I've seen a lot of people do that. I get lots of messages where people say, "Oh, what about this and this and this correlated to this?" And I'm like, "You have no idea what you're talking about." Okay, I'm really tired of the fact that somebody. And another thing too is like people will take like a macro high, not macro as macroeconomics, but like high time frame, so higher perspective. They'll take something super smart and super high perspective and they'll apply it to a 4-hour chart. Okay, don't do that. That's really dumb. Okay, that doesn't make sense. Okay, when you're comparing, and that's the thing. A lot of people, I've got issues with like the DXY and 2-year treasuries in particular, because people will compare that and compare housing rates, compare all this stuff, and then they'll show me a dang 4-hour chart and see, that drop was because of that. No, it wasn't. Okay, you you cannot convince me that there are people with billions of dollars that are looking at multiple year time frame charts because they want to dump the 4-hour chart because they want your money. Get out of here. You're not, and this sounds bad, but I'm gonna say it, like, you're not that important. And that's a good thing. That's a good thing. You want to be behind the scenes. You don't want to be too big to where people notice you. Okay? Like security, like information technology and security in your household. The biggest reason that you are not hacked day to day is because you're not important enough to be hacked. And that sounds bad, but it's not. It's a good thing. Because guess what? If you had $1 billion and you had it on your computer, you would get hacked more. Okay. Yes, you are protected by companies you work with passwords and things like that. But one of the thing is like a hacker is probably not going to localize and target you to run the risk of making, hacking you for the $50 you have in your checking account. Okay? See what I'm saying? So, anyway, I digress from that, but the whole idea is don't don't focus on being too smart if if the substance isn't there, okay? Don't don't try to be too dumb. Most people don't try to be too dumb. Most people have a problem trying to be too smart. But don't be too smart unless you actually have the substance and experience to supplement that with results. Because at the end of the day, you want to make money. Okay, so if you're trying to say something smart and do something smart and it's not working, maybe you do need to dumb it down. And I'll be the first one to admit I dumb down my analysis all the time. Some of the most effective, I've said this over and over and over again for almost a year now. My most effective analysis has been high time frame moving averages. High time frame moving averages, or a flip of the 50 RSI on high time frame, or the flip of an A rune on high time frame. High time frame works for everyone. The biggest factor is that people don't want it to work because they get too freaking bored. And that is a shame because people are leaving money on the table because they want to feel something. Well, go feel grass. Okay? Go feel something else. Go feel, spend time with your spouse or your kids or learn something. Don't become addicted to this and then lose your money in the process. That's the thing. Like people want to feel something, they become addicted and they don't even make money off of it. Like you just wanted to be addicted to this. There's plenty of other things to be addicted to that are much better than this because your eyesight's going to go bad staring at a screen all day. You're going to neglect your family. I know people that have traded so much in this space that they ended up losing their family. Okay? I've known people that I've known there's a decently successful trader, and I won't mention him, but he did well, but he got divorced because he wasn't there for his wife, and his wife left him for another man. So, and you can argue the logistics of that, but the point is, um, find a healthy approach to trading. Don't think you're too smart for your own good, but don't think you're too dumb either. Okay? Like the biggest mistake that I see is that people are unwilling to make low IQ trades. But also the biggest mistake I see is that some people make really stupid low IQ trades. Okay, like I've seen this around like having an IQ of 20. Okay, and I really like that analysis because you can be too dumb. Like you can have like an IQ of like 5 and be like, I'm just gonna hook up my DeFi wallet to this, and if it's a spam link, oh well, somebody donate money to me. Well, that's really dumb. That's not the dumb that I'm talking about. Okay, um, but what I am talking about is like sometimes, you know, I guess what I should say, there's no lack of people that are trying to act smart. Okay, most people want to find the most intelligent way possible because they equate intelligence to professionalism and professionalism to money and winning money. And I can tell you that that's not true. Okay, the biggest thing is for you to find an edge, and that will look different for everyone. For me, it was Aaron. I'm probably one of 30 people in the world that use the Aaron. Okay, and so I don't expect you to know it. Okay, I just do some basics, and if you want to know more, I got more that you can learn from me. If not, that's okay. I don't show it off. It's just part of my style. For someone, it might be moving averages, and and for someone else, it might be order flow. But I've talked to a lot of trading based clients, and people really, I've talked to them on the phone, and they react very weird when I start talking about moving averages and RSI. But why? It works. It's worked for years. And so I don't understand, like, you'll be surprised how many bots, you know, like there's certain big personalities out there, like I guess I shouldn't say the names, but I want to, but they're just glorified moving average bots. And some of you guys paid $500 a month for them. So, anyway, the point is understand the aptitude that you have with what you got. Don't try to act smart if you're not, honestly. And understand where you can come from, what you can learn, how you can adapt, find ways to make money, find an edge for your analysis, find two different types. I usually say one or two different types of trading ideas, refine those, keep working on it. Okay. And so you will get better. But the danger too, however, is thinking that someone else is trading better than me because of the way that they trade. Now that may be true, but it also may not be. And so that's the skepticism there. Okay, don't necessarily think that someone else is trading better than you. Okay, so anyway, that's quite a long discussion. I'm going to get into the analysis here. Talk about Bitcoin, Ethereum, and Solana for today, and we're going to continue with this theme. And so we'll keep going with this, and we'll just keep going with it. All right, so we're going on to the Bitcoin in the weekly, and so we are going to cover the charts. We also are going to continue with micro themes according to the main theme that we just had. So if you didn't listen to it, it's about the amplitude of analysis, how you need to gauge your intelligence and perceptions of how you trade, the strategies that you use in a way that makes sense, but don't overdo it. Like, don't overcomplicate things, but also, your goal should be to make things more simplified over time. Even if you're using something as complicated as order flow, simplify your strategies, what to look for. That's kind of what if I could summarize that in 30 seconds, that's about what it is. And so it's pretty lengthy. I think it was probably 10 minutes. Um, so we're going to keep going with this. So Bitcoin, we're going to look at this on the weekly, but we're also going to talk about, in addition to that, a very simple strategy that Michael Saylor is doing. And so I kind of want to go back and forth with this, right? So like Michael Saylor has just bought more Bitcoin in the past couple days or whatever. I think today. Um, and so the idea is that's a lot of people think that that's pretty dumb. And so he's either going to look like he's very dumb or very smart at the end of a decade. So we'll kind of look at that as we go. But I want to analyze this. I spent too much time talking, so I do want to analyze some weekly stuff. So one thing I want to say is that we are up green for good for a little bit, not super much. For some of them we are, some of them we're not. But overall, pretty healthy so far. So I want to mention. So last week we had the run up here, had the rejection. So that wasn't really what we wanted to see. We kind of have a swing pattern failure here. But overall, I'm not a swing failure pattern guy. They don't tend to work out as much as you think they do, and because you got one here, but then it went ahead and ripped up. So that's inconclusive to me. I'm gonna go ahead and get rid of this. It's just kind of annoying to me. And so this is kind of what we see on the weekly. I'm gonna look at the Aaron band, and we also just closed bullish or bearish on the band. I do want to mention, however, that I think that depends on the chart. So because on the Brave New Coin, we're still not bearish. So this is something we got. So we've entered kind of a bearish trend for now, and so this is one of these things where I'm I'm slightly bearish now, and so I mentioned this in the past 24 hours. I'm probably more bearish than I am bullish right now. The problem is I'm actually still bullish, and so it just depends because we got a few other things I want to look at, and so we'll just follow me here with this. So first things first, we look at the RSI. It is under the 50, so that's not a good sign. The AO is also negative, so that's also not a good sign. So both momentum-based indicators are flowing to the downside, so that's something I want to mention. We don't have enough upside potential to look at bullishness. Now, however, that being said, one thing that we could do is just completely rip up to the upside. and that is possible. And so I want to get into that. So the A-run here, we're in a bullish consolidation. So on the weekly, this is a good thing. And I want to mention also that consolidations have a greater effect on high time frames. So we can look at this here. This was a classic bearish consolidation, and we went all the way down pretty much. There was almost no swing to the upside except for right here towards the end. Okay, and so when you have a structure like that, that's significant. This one's a little more complicated because it kind of trickled up, but while it stayed down, it continued to go down. We have a wider consolidation here. So this is from 80% to 21, so it's like 60%, where this one was, what was it, 93, and so that's about 25-30%. So that's going to have double the effect. So we could rip upwards, and I'm prepared for that. I'm not necessarily bearish here. I'm only bearish because we flip bearish on the Aaron. Um, but I'm trying to look for an example here that we have that's relative. I mean, this, no, that's probably not the good example there. I mean, that isn't either. Let's see if I can find one. I don't think there typically isn't similar examples too much on the weekly. So, but that's one thing I want to keep in mind is that we are entering a consolidation phase, and consolidations do tend to happen much more effectively on higher time frames. So I'm watching out for that. So we will see how that goes. Another thing I want to mention is the 200 EMA. And so I'm going to switch this over. And so we are hanging above the 200 EMA right now. And so this is my line in the sand. Okay. A lot of people will interpret this different ways. And this is where the amplitude of analysis can come into play. Like, is this dumb? Is this smart? And so we have touched twice here. So we had the breaker move. We touched twice here and, about 6 to 7 times right here. So we're getting upwards to 10 touches on the 200 EMA. Now, is this bullish or bearish? That depends on your interpretation. Some people will say that, hey, it is consolidating towards the EMA, so therefore it's going to break, and that is a bearish sign. I do not agree with that. I don't. Because it depends on your interpretation, of course, but generally speaking, I don't view EMAs in terms of consolidation. I look at price actions in terms of consolidation. So with EMAs, you're looking at a trend. And if the trend does not break, the trend is holding, right? So the whole idea of an EMA is that you're looking at a trend over the course of the last 200 candles. And according to these 200 candles, the trend is still favoring price action above the 200 candles. And so that's what I'm looking at. This is bullish to me. This is not bearish to me. Okay? Now, I understand that there's some subjective interpretation with that. Totally fine with that. I just don't agree with that. So for me, and it's one of these things, the cross of the 200 EMA on the weekly, and I've mentioned this plenty of times, this happens so few times when you get a touch. Technically, it didn't even happen. It happened there on the older charts, but it happens so rare. Okay, it happened once in 2018, once in 2020. We broke below. It happened once again in 2023, and it has not closed underneath since. Has not closed underneath since. I want to keep that in mind. It has went down it, but it has not closed, and that's another thing. People interpret analysis as like, oh, it breaks down below. Okay, market's over. Well, wrong. So that's the thing. You got to look at fake outs and wicks and things like that. And so, in my opinion, this is holding. I'm still bullish. If this breaks, then it breaks. If not, then I'm right. I would rather be wrong in this scenario. I would rather, I should say, I'd rather risk the idea of being wrong in this scenario because these don't happen very often. Why would I give up my position down here? Here, it doesn't make sense. I would wait for a failure of that, and then I could just buy on the reclaim if or when that happens. So that's the thing. Another thing that we can look at. I'm going to get out of the logarithmic here. Spend a lot of time on the weekly, which is good. We have a trend line here, and so we are approaching this coming up. And so now this is a neutral aspect, but this lends itself to say, are we going to get an impulse? Are we going to get a down move? I've mentioned in my Nowhere Discord that a lot of alts have hit a trend line just like this, and they expanded um, very much to the upside. I can't think of the coins offhand that have done that. I should have been prepared for that, but um, it's one of those things. Is it going to reject? Is it not? We got about 2 weeks to figure that out. So, um, knowing us, it might just keep going straight forward and doing nothing. But we'll see. And you got a lot of things going on here. You got on the downside, you have this liquidity structure right here. I'm telling you, this is not going to be easy to break because this is a big flip. This which is already retested, by the way, technically retested twice. And so you have that, and so you also have this structure as well. So now we are in between two structures. And so you can look at it like this. If you want an easy play, just play the break of the range between, you know, 24,400 and 32,000. Okay? I think that's probably the safest bet to play it level by level. Okay? I'm not playing it that way because I've bought early and there's other things playing into that. But this is why it looks bullish to me. We're in a range. We're at the lows of the range. We're at the trend line of a major trend, and we're above the 200 RSI or excuse me EMA, and we also have a bullish A-ring consolidation. There are four things that are matching up to the bullish side versus what do the bears have? Oh, it just looks bearish. It just looks bearish. I'm scared. I'm gonna pee my pants. That's not good enough for me. Okay, um, man up. Stop looking at your emotions. You can look at your emotions for being a man. That's not what I meant. But the point is, I do think the more you look, the more that there is evidence to say that we have um, a more likely chance to go to the upside. Honestly, if you really look at it, and I mentioned this in a tweet today, that a lot of people want down price action because they have not buyed, because they didn't buy. Their bags are not packed. My bags are packed. I am ready. Okay, and I'm not bullish because I'm ready. Like I'm bullish because I saw the signs. Okay, and I still see what's going on, and the market looks very good today. So um, we'll see how this goes. But I like the move that we have here. I have no reason to be bearish until we flip below the 200 EMA. Okay. And even then, it would probably take a break of 24,300 to get me to flip my bias. I shouldn't say, I don't like the word bias, but flip my ideas on this. So let's go ahead and go to the daily and we'll kind of see the structure playing out. And so this is another structure that people think about. So this structure is very similar to structures we've seen before where we have kind of an upward move, a deviation, and then downward move. And so when you have kind of like this Adam and Eve pattern, you have the deviation and then the rejection. The deviation I want to reference because that is what plays out. Okay. When you have a deviation, deviations are very strong. And I've mentioned this before. Almost every RSI divergence is deviation. Deviations happen all the time and people don't really understand them. Here is another one. And so the problem is that people interpret this as a deviation, and I agree with that. Although that was a news-based one, so I think there is some uh, notes that need to be added to that. We should have already fallen through, but we didn't. We faked out. I knew that we would fake out. We faked out here and here. So we went ahead and moved up, and now we're kind of in the middle. And so this is where we're at. We're in the pocket. And so this isn't this deviation isn't as conclusive as other deviations in the past. So it's one that we had the breakdown and the breakdown didn't work. And so now this deviation is invalid because this deviation is valid. Okay, so now you have two deviations, one and two. So this is the stronger deviation right now. We had a better follow through of it, and now we have a retest. Okay, and so that's the interpretation of this. This isn't that bad to me. It's not that bad. We have some concerns here on the lower time frames. But this is where, if you zoom up to the daily, you can basically view this entire thing as a range. Okay. And so this green range, and I say range because it's not a very good range. It's more of like a trending move. But the a break of this will probably determine the higher time frame, the weekly range of that. So I want that to keep in mind. So I think that's pretty much the biggest perspective. Again, I would not complicate this. I don't think this is something that you need to complicate. And so that's the thing. A lot of people want to complicate this. I really gotta restrain myself because I'll add an extra hour to this. But my other video about macro is going to be the main foundation of that is people complicate things too much. They look at all these charts that nobody looks at. Okay, nobody looks at it. No average person looks at it. No crypto person looks at it. You know, um, people that make millions of dollars a year don't even look at these charts. But somehow, you in your basement or your office or wherever you're at, you're gonna find some charts to put two and two together because you believe so, and of course you're gonna be right. Okay, so there's a lot of hurdles to go through that. But the main problem of that is that you try to make it way too complicated. You try to fit something that conforms to what you want the market to happen. Okay, and that's the problem. Okay, I'm not looking at the market and saying, "Oh, what's going to happen?" As far as like what I want to do, I'm looking at the market of, okay, what is it doing? Okay, and you can go back up to my old videos a year ago, almost, about November, last November, and I can tell you, I was basically screaming at my into my microphone about people having to buy at 16,000. And here we are at 26,000, and people are wanting 16,000 again. And there's a good chance that we're not going to get it, but you want it just because you didn't buy it. That's the real reason. It's not because the 2 year yield or the Fed rate cuts or any of this other crap. Because even if some of those are correlatively true, you don't know the time frame on which that's going to occur. So you're guessing after guessing after guessing after guessing, and the odds of you being right after right after right after right are very slim, when you just as easily can just trade an EMA and you'll be just fine. Okay? Um, Low IQ. That's what I'm saying. It's better. But anyway, like part of this is with Michael Saylor. Is he an idiot for playing what kind of strategies does he have? I think it's very interesting to see that play out. We'll see how that plays out. We'll see how smart or dumb he is. But it's a really good example of the aptitude of analysis. I don't know how much analysis he actually does, but I think that's the point. Like, um, I think if you guys are honest with yourselves, he might be trading better than some of you all. Um, and so maybe not. So we'll see how he looks. The thing is, too, there is a limited supply, and I think that's the perspective that he's coming from. He knows that there's a limited amount. He has 0.7% of the entire Bitcoin supply, by the way. And so I think his goal is probably to get. I think he could get 1%. That would be very interesting. And so he's either going to look like a very smart guy or a very dumb guy. And the bad thing is a lot of people are dogging him, and that's a shame because you guys are here. Like if he loses money, you lose money too. And so I don't understand it. But anyway, I think that's a really good example of an amplitude of analysis. But we're gonna go ahead and keep going. We're gonna go to Ethereum, and then we'll go to Solana if we have time. All right, going on to Ethereum. Going to go on the weekly. I mentioned yesterday in my Nowhere Discord that Ethereum doesn't look too bad, and that was on a 4 hour. And we're up a little bit, not much. This is a pretty decent day so far, better than I was expecting. So we have a few things to be concerned about here. We had the longer bearish down move here. We had a failure of the RSI, SPF, whatever you want to call it. I always get the acronyms messed up, but we had the rejection here, and so now we're hanging on the trend line. And I'll mention that in a second more. But we're still on a bullish A-ring consolidation, but we're going downwards. So this is what I call an A-ring divergence. It's not necessarily a divergence in the typical sense from a momentum perspective, but it should bounce back up. So when I talk about divergences from an A-ring perspective, I'm talking about it from a mean reversion perspective. And so it should bounce back to its normality. And so I would not be surprised if we just launched straight back up to 1630, which isn't much, like $50 or whatever, pretty soon. Because this needs to break one way or the other. And so we'll see how that plays out. But we did break below the 200 EMA, but the EMA on the ETH is not as important as you can see on the ETH chart. It has a habit of not listening to it. So I'm sure there's another EMA that does, but I don't want to fit. I don't want it to. I don't want to force that, right? So, big thing I'm looking at, however, is the trend line, and this is pretty clear to me. This is good. This is something that I was wanting for some time, and we got it. So I'm probably going to be a buyer here, to be honest with you. And so overall, it doesn't look that bad. On the Aaron band, we have been bearish for some time, however, so that's another thing to play out. So that's something to keep in mind. However, it does tend to just rip upwards like this, so that's a lot of that's inconclusive. I think the 4 hour and lower time frames look really good on Ethereum. That's kind of outwards of this discussion, and I'll mention that in Nowhere tonight. So again, if you're not in my Nowhere Discord, I make a video every night, on Monday through Fridays or Sunday through Thursdays actually. So, but overall, this looks pretty good. Good reaction so far, but we're only one day into that, and so there's not really much else to say with that. Another thing here, I'm going to get rid of this to get rid of some noise. We have this kind of breaker move, and so we're kind of below the middle of that on the fifth on the fib. So if we can break above that, that looks pretty good. Yeah, other than that, it's pretty simple on Ethereum. So here it is on the daily. We are breaking above this. I would love it if we broke above 1600 or 1593 on my chart, because that would be a little more confirmation that we break above the zone. I think that's what a lot of people are looking for. In my Discord, I mentioned that this could be an Adam and Eve pattern forming, and it looks like that could be the case. Another thing is that we have a trend line here. And so, again, these trend lines are forming up everywhere, and people are not paying attention to these. And that's why I mentioned, like, the analysis. Some of you guys will trade better, honestly, if you just dumb down your strategies. Really, I'm being completely honest. Because if you don't think you know what you're doing and you try to act like you know what you're doing, then you become a mid curve. And so that's the thing. I have no shame. I'm not, you know, I have no shame in saying that I'm focusing on trend lines or EMAs or RSI. Who cares? You know, I'll probably never see you in my life. So, and I say this with being as nice as possible. Like, you do you. As far as your trading goes, you know, if it works for you, then do it. Okay. There are some people out there that criticize other people's strategies, and I think that that's really silly, because if something works for you, then why does it matter? So anyway, but trend lines are a big deal. I think those are something that we don't really see often, and this is the one that I see on Ethereum. So I think that's good. I think I'm gonna put that as an alert. So there we go. And you know, it's one of those things. You know, I do, as far as analysis goes, I do want to mention a little bit of FA as well, because with Ethereum you got the DeFi space, and so that's the thing. Like, are you bullish on DeFi? Then you should be bullish on Ethereum. You know, I don't have much to say about the amplitude of analysis on Ethereum other than the trend lines. But you know, DeFi is something that Ethereum needs to be healthy for DeFi to succeed. So if you are trading a DeFi coin and you are bullish on that coin, it doesn't make sense if you're bullish on that coin long term, but you're not bullish on Ethereum as well. So anyway, it's weird how people try to correlate things, but they don't try to correlate the opposite way. It doesn't make sense to me. So anyway, that's Ethereum. A little simple with that. I'm gonna go on to Solana, and then we'll just end the video there. All right, we got Solana here on the weekly, and I want to mention a few things. First of all, we did actually have an up move, and we've had that for the past couple weeks now, and so that's a lot of these alts tend to be waking up. And again, I want to emphasize, I don't think the market is as bad as it looks. Well, like, why would it? Um, it just doesn't make sense, and I really do think people are looking at this out of emotions. And one thing that they're clearly ignoring is just basic strategies, you know. And so that's kind of the importance for Solana in relative to the amplitude of analysis is have a simple strategy. and look at the potential that it brings. So like Solana, for example, is a good potential coin. It's just I'm pretty confident that Solana will get to all-time highs at one point. And so if it does, $19 is a very good freaking deal. Again, you just got to wait it out for a year. I talk about that. Like your problem with trading is not the fact that you're good or bad at trading. It's the fact that you're probably too impatient. And some of these are really good if you just wait like a year. You could make more money than you can by buying something, logging out for 12 months, and coming back to it than you would being obsessed with it and losing your family and your friends and your life over it. Okay. So it's one of these things. So anyway, that's what we got on the weekly. The RSI is broke for now. Got a bearish wedge, but it is looking to cross. So we could have some bullish potential if it happens. So we have a few different things going on I want to mention. So you have another trend line here. And it's okay. I don't know if I can. I guess that's actually better. So we'll look at that. I kind of want to look at this too. See, no, that's too wide. So this, so you got your trend line there. You also got two price points. You have this structure with this low. So now you have that. You also have. You could also include. Here, let me get this one first. You have this gap structure here. And so let me kind of widen this up, and that's from here. So that was kind of a deviation that also confirmed from here. So now we're kind of in a range, and this is a little more complicated, and that's okay. That's okay. Um, but overall, oh, we have another one here actually, right here. And so this is the structure that I want to look at because that pertains to the current price action. So if we can flip that, we're going to get to the mid of the range, and that looks very positive. We also have the trend there. So everything looks pretty good to me here. I have no reason to think that this is overly bearish per se. And it's one of these things. Solana is a coin that has a lot of potential that's already been beaten up. So unless we break something super low like $14, $15, I don't really see a reason to be super bearish on this. And even if we are, this is Solana should be a buy the dip scenario long term. I think the best approach is to look at this from a higher time frame perspective and buy at increments. So, every $3 to $5 move down you could buy, but and don't rebuy necessarily at the same price point. But I think I think under $20 is a steal long term for Solana. So we'll see how that goes. But that's pretty much the weekly. It's pretty self-explanatory. I can look at the 200, but it doesn't even show up. So I guess it's not good enough. So and here you also got another. No, that's below the 200. So and it seems like it respects it okay, but not conclusive for this video. So this is kind of what we got here. Again, we have this consolidation. We need to break above this. And honestly, I would even say break above 2180 before we can kind of do anything with that. Our side looks like it might be recovering. Wedge is bearish. So a little neutral on this. But I would say if you want to be a little more conservative, a break of 2180 would be good, or a break below 1740 would also be good if you are bearish. So anyway, so that's the video. I hope you liked it. Apologize if it's long. Again, I want you to keep in mind that I actually chopped this video in half, so it was going to be a long video anyway. So I hope you enjoyed it, and I'll see you next time.